Welcome to Thoughts on Investing.
Right now, retail investors are chasing the most obvious AI names on the market. They are looking for the flashy chip designers that are already up hundreds of percent. Meanwhile, one unexpected company is quietly building the physical backbone for the entire industry. Before we look at their financials, remember that investing involves risk, and you may lose money. This is not financial advice, so please do your own research before making any financial decisions. While market attention remains fixed on the chips themselves, the physical infrastructure layer remains a critical yet less visible part of the equation. If you hear the name Dell and immediately picture a plastic laptop from the early 2000s, you are operating on outdated information. Artificial intelligence models, whether they are enterprise copilots or massive language systems like ChatGPT, require an enormous physical footprint to function. That physical footprint relies on three non-negotiable pillars. You need massive compute power to train the models, massive storage to hold the data, and high-speed networking to tie it all together. Dell is one of the very few companies on Earth capable of providing all three of those pillars at a global enterprise scale. This animated chart shows Dell's recent financial performance. We can see they pulled in roughly $113.5 billion in revenue, which marks a 19% year-over-year growth rate. Down here, we see their free cash flow sitting at over $8.5 billion. Free cash flow is the cash a company generates after accounting for the money required to maintain or expand its asset base. This proves Dell is a profitable, accelerating operation. Compare that growth against their valuation, specifically their forward PE ratio, which sits between 13 and 15. A forward PE, or price-to-earnings ratio, divides a company's current share price by its estimated future earnings to help gauge if a stock is undervalued. You have a company positioned inside the fastest-growing sector on the planet, expanding at double digits, yet trading at a discount compared to its peers. That exact mathematical disconnect creates a specific investment opportunity. The demand driving those numbers is expanding. We are moving past the initial phase of big tech hoarding chips and entering a phase where private enterprises and sovereign governments are building their own dedicated AI systems. We can see the financial reality of this expansion through Dell's $64 billion in AI server orders and a $43 billion backlog. A backlog represents orders that a company has received but has not yet fulfilled or recorded as official revenue. Dell doesn't have to design the silicon chips. Instead, they provide the full stack deployment, the storage systems and networking solutions that bridge the gap between AI hardware and real-world business use, creating recurring relationships. Dell doesn't need to win the AI race. They just need to supply the race, and that's often the more profitable position long-term. This is a daily chart of Dell's stock price, providing visual evidence that market participants are responding to the underlying financial data. Notice the long, downward-sloping white line capping the price. That is a descending resistance trendline, a technical barrier where sellers historically step in to push the price down. You can see the exact moment the green price candles break above it. Before that breakout, we had an accumulation phase in the lower middle section, indicated by the flat price action and lower volume bars. An accumulation phase is a period of sideways consolidation where retail interest often wanes, allowing institutions to buy large blocks of shares. Once the stock broke the $150 zone, we see a cluster of green volume bars on the bottom right. That surge in trading volume confirms the strength of the upward price move. Right now, the price is sitting near $165 and forming a bullish continuation flag, these small descending parallel lines on the far right. A flag is a brief pause in a strong trend where the stock gathers energy before potentially pushing higher. This precise sequence, moving from quiet accumulation into a high-volume breakout, signals a structural transition toward a bullish market sentiment. We are looking at a company sitting on tens of billions in confirmed backlog, growing its revenue and earnings at strong rates, and breaking out technically on the daily chart. The recurring demand for physical servers and storage systems creates a steady value layer underneath the more volatile software trends. Every other part of the AI ecosystem relies on these systems to function. Dell isn't trying to be the face of the AI revolution. They are executing on the math and becoming its foundation. If you found this analysis helpful, please like the video and subscribe to Thoughts on Investing for more deep dives into market data.